So, lads and ladies, today we're going to be running through daily advice. How to get it, what is it, how do you understand it, how can you use it? Now, all your daily bias is identifying a daily bias involves determine a prevailing direction or sentiment of the market for that trading day. This bias helps you decide whether to focus on buying or selling opportunities and allows you to align your trades with a larger trend. Below are key steps that you can find to help you with your daily bias. Analyze higher time frames, the weekly and the daily. Look for key support and resistance levels. Check for market structure and trend patterns. Use some sort of candlestick pattern. Consider news and economic events. Analyze the previous day's candle. And that's it. So I'm going to jump into it now and I'll show you how we can get our daily buzz. So when looking to get our daily buzz, we want to look at or start on, if we have access to this thing now, our weekly. We go to the monthly, go to the monthly, get a rough idea. You can see price is at the been ranging up higher for a while now, since a while, October nearly, January, nearly a year. It's been going pretty much up. This is a Euro USD chart, by the way. So if we're going up on a Euro USD chart, it means that the dollar is going down in comparison to the euro. Now, if we look at this chart here, we can see that price is very clearly in an uptrend, creating higher highs and higher lows. What are our higher highs and higher lows? Bang, 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 bang. Let's see what price is supposed to do here now. Now, we know we're bullish on our weekly. All right, how do we know we're bullish on our weekly? Because we've just showed it. So if we know we're bullish on our weekly, that gives us our first confidence to look for buys. No point if the weekly is bullish, no point looking for sales. So we know overall monthly, weekly, bullish. Daily, let's jump to a daily, because just because we're bullish on a weekly, say this is a weekly chart, that doesn't mean that on a daily chart price is doing all this to create this peak, and then price is going to come back down. So as price is coming back down and before it goes back up, there's still opportunities for us. It looks a bit bad now, like try to make that a different color. As price is moving up in, don't like that color now. As price is moving up in this range, we have opportunities to buy, and as it's moving down in this range, we still have great opportunities to sell. But it's just important that you know that when you're selling, you're just trying to get a short-term sell for a long-term extension. So you can absolutely 100% take advantage of this short-term retracement if you know that it's only retracing to make a leg higher or a higher low on a weekly time frame to continue bullish. So now that we know that, and now that we know our higher time frames are bullish, let's drop to our daily as well. See, if you have your chart like this, just press Alt and O on your keyboard and it will revert your chart. Like, so you can clearly see here, we're still looking for buys here. But if we look in a weekly time frame, let's have a quick look and see, are you seeing a fair value gap here? Although the fair value gap was tapped into a little bit, we still have a bit of a fair value gap that can possibly still be filled. So just take that into consideration. Don't mark it up right now because we're not doing the top-down analysis. We're just having a look to get our daily buys. So if we know that there's a fair value gap on the weekly time frame, but then you can kind of say, right, well, what's around that zone? So then I just identified here a minute ago that we have this continuation block or order block in and around this zone. So if we put a horizontal bar, say just at the open of this zone, and then jump back to our weekly, we can see how that aligns to sweep this low and get a deeper retracement into this fair value gap. Do we have to do that? Not a chance. We could just 1,000,000%, we could just keep running away and just keep going up. But it's just good to know. Now, so if we zoom out here, now we're on a daily time frame. So what are we looking at here in a daily time frame? We know that we're looking for buys. Why are we looking for buys? Because the overall trend is bullish, so we should be looking for buys. Now that doesn't mean that we just go into the chart and right, oh well, I'm looking for a buy, bang, place a buy where price trading at now, stops beneath the low, handy target, the next level of liquidity, happy days. That's not what we do. The bias is just bullish. So we just want to look and wait for a buy to occur, or we just want to look for the confluences that would allow us to take a buy position in the market. So if we look at this now, we have, again, I don't want to do a top-down analysis, but if you did, you have this liquidity here, and then you have liquidity here, and then you have liquidity here, and this line here will be you entering into a fair value, an order block, and then you have these 4-hour fair value gaps that could also be tapped into and used as confluences in order to take that extension. So what can we do here? We can take a sell if you wanted to. It's going against, that's called counter trend trading. It's when the trend is going up the way. That's a horrid color. It's when trend is going up the way and you try to catch this movement. That's a counter trend trade. Why? Because the trend is bullish and you're trying to take a sell. Doesn't mean you can't do it. It just means that your sales are always going to be so much smaller than your extensions. Look at the sales and look at the extensions. Sell, extension, sell zone, extension, bigger sell zone, bigger extension, sell, no, sell, and then massive extension. So if you know you're bullish then on your weekly, well then what can you do then? Let's zoom out and let's look for some sort of level of support or resistance. So we're going to get rid of this line here now. Oh, we're not. Get rid of this line here now. Right, well then what can we see here now is happening as well. We can see from this area here, just get a better view of it. Now we can, no, that decided not to work. Bang, bang, bang. No, that's, yeah, there you go. Now, look for some sort of support and resistance zone. So if we look here, we can see every time price taps this zone, we got a reaction. Tapped, reacted, tapped, reacted. Just about tapped in here, got a little reaction, came up, swept any of these sellers with their stop losses up here, they're gone, and then ultimately got a retrace and reacted. Tap, react, tap, react, tap, breakthrough, tap. So now you're sealing, so to speak, if that's how you want to call it, if that's how you want to look at it. It's easier to look at it as liquidity in the markets because to me, personally, ceilings and floors don't really make any sense, but they are the same thing. They're the same. Looking at it as a ceiling is the same as looking at it as a level of liquidity. It's the same thing. It doesn't sound the same. You say your floor is going to bounce off the floor and then hit the ceiling and keep bouncing forward and back. It doesn't really make any sense. But when you look at it in terms of where liquidity lies and how banks and institutions are placed in the market, it makes a lot more sense. Tap, reaction, tap, breakthrough, tap, reaction. So if we, based off of what we had here every time we hit this zone and what we had here when we hit this zone after we broke through, you could kind of say that price may very well come in, tap this zone and continue to go higher. Now that's two ways of predicting, or not predicting, of getting a daily bias. Now another way, it's a bit give or take, is identifying the daily candle, the previous daily candle. I've seen it, I don't know where I've seen it in passing, and I've seen that if you take, say, this daily candle, for example, and you say that this is a very bullish green candle and it's at the eating all these candles, it's an engulfing green candle, it's at the taking out all of these candles, and it closed closer to the high than it did to the low. So say, for example, you have just this big candle here. This is an example where it didn't work. So the way it works is that if you take the previous day's candle and wherever the body wick closes, so if the body wick closes near the bottom of the candle, even a big wick, but then that tells people that some traders, I don't really use it, but I'm just going to give you the information because I picked it up in passing. And if it closes to the lower level of the candle, that means that there's more selling pressure, which means tomorrow you can look for more sells. Or if it closes closer to the height of the candle, you can look for buys tomorrow, because it shows that towards the end of the day, That's who's in control. But towards the end of the day, the buyers are in control because in the previous day, the buyers drove the price higher towards the top range of the candle. So let's say, for example, here we go. Here's an example where it didn't work. Well, we don't know actually because that candle's only at their opening, so we can't really use that. This green candle here, you could look at that and say, right, well, prices after closing more towards the lower end of the candle than it did towards the higher end of the candle, even a bigger wick at the top than in the bottom. So you can say tomorrow might very well open and go bearish. You can have a look at this one. You can see we're closer to the bottom of this candle than we are, leaving the big wick up here. So price came up, created a big wick, and then sellers took control towards the end of the day. And then we opened up, price falls. Now let's have another little look. And it's important that you understand the candlesticks as well, especially on a daily time frame, because you might have some doji candles like this where there's what's the word I'm looking for? Indecision in the market. Like, so if you have, these are bad examples. This one closes up to the higher end of the candle, price goes up the way. Look, I wouldn't really use this now, in all fairness. I would basically just go off of what I told you. I just said I'd let you know that that's what I picked up in passing. I don't use it ever. I've never used it ever. I picked it up, so I said I'd let you know, pass on that information. Somebody might use it. You might be able to use it or back test on a different chart and you might get a different result. But for right now in this scenario, it's not the best result. So ultimately just go for your support and resistance, go for your higher time frame, and then that'll give you what you want for your lower time frame. Key support and resistance levels, candlestick patterns, and indicator confirmation. You can use indicators as well, such as your RSI is a good one. If we toggle that off, RSI volume, with your RSI, if you're below the RSI divergence is way better to use. Go bang, bang. No, same one. Bear with me. RSI. Yeah, so this just tells you then if you're below a certain level, if you're below the 30, or if you're above the 70. But then if you're above the 70, it indicates that the market is oversold. And if the market is oversold on a higher time frame, but then you can ultimately estimate that price may come in and drop down. Why? Because it's oversold or overbought. So if it's under the, excuse me, if it's under the 30, it's oversold, and if it's over the 70, it's overbought. So it's due a correction. RSI is another good one to use. Daily buys is only kind of really more important when you're looking for top-down analysis, and it kind of ties in together with your top-down analysis. And as you get on now, and as we come to towards the more technical parts of trading, you should start to learn how to tie in your fair value gaps, equilibrium, order blocks, liquidity, daily buys, and other complements that you may have. Tie them all together, learn to tie them all together. And yeah, daily buys is kind of just one that you would use at the start of your top-down analysis before you go into every trade. Before you go into every trading day. Have a rough idea. Again, don't dwell on it too much, but it's one of those things that don't let it pass you by either. Have a look at it. Don't spend loads of time marking it up and all that. Just have a look at it, get a rough idea. If it's going up, you're going up. If it's going down, you're going down. If it's going across, you're staying away. Simple as that. Simple as that. And as always, you can have a deeper look through daily buys with the course. I'm not going to run into it now because I want to keep these videos fairly short form. And it's not one of those topics where you have to have a good, long, detailed description video of it. If you run through it yourself, you'll understand it. There's not really much more to understand than what I've just told you there. No. So that's daily buys, and I will see you in the next video.